big question, of course, is will Chairman Powell respond to President Trump's latest attack on the central bank? Here's what the president said yesterday.
We are actively competing with nations who openly cut interest rates so that now many are actually getting paid when they pay off their loan, known as negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of that money. Our Federal Reserve doesn't let us do it. I don't say thank you, thank you. The smart people are clapping.
Steve Liesman joins us right now with a look at what the markets can expect. And I don't know, Steve, I would expect.
I'm just clapping. I want to be one of the smart people, Becky.
Oh,
go
okay.
Too late.
No, I would expect that Jay Powell is not going to take the bait.
No, you can expect him, Becky, in his testimony today, and he is appearing before the Joint Economic Committee. He's going to stick to his practice of not responding to the president's criticisms and repeating that the economy is, quote, in a good place. So let's take a look at what a good place is or where it is. It's 2% trend growth. That's near where we are right now. Low unemployment, in fact, record low unemployment, not much inflation going on. And he's got those 3 rate cuts in place and some other stimulus in train here. Powell won't say this, but he likely thinks policy's in a good place because he's engineered a pause in rate cuts without a big market sell-off. That's a big issue right now. The most important question for Powell is whether lawmakers embrace the views of the president. So far, they've not taken on his critical comments of the Fed or the idea that monetary policy should be used as a weapon in the trade wars. But the Democratic staff of the JEC did issue a report ahead of the testimony that says in part, and I quote, the lack of recent signs of inflation suggests there is room for monetary policy that continues to accommodate increased employment. Democrats are less explicit than the president calling for further rate cuts, but the statement shows bipartisan support for rates to at least remain on hold, and no change in monetary policy is almost certainly the impression Powell's going to convey today and in separate testimony tomorrow. Becky and Joe, it's interesting to me when I look at the outlook for Fed rate cuts in the futures market. Nothing at all in December, like 3.9% chance of a cut. You actually have to go out to July till you get to the 50% probability of any future rate cuts. So this idea of the pause is well built in for a big chunk of next year as well.
Steve, we're back in the game with trying to figure out the 10-year, and we're thinking over two, and then maybe 2.5.
Oh my God, really? Over 2?
Don't you think that's in the cards eventually?
Sure.
And it would be,
we're almost there until yesterday.
And it would be good, wouldn't it?
Well, where are we now? 187?
Yeah. Yesterday we were at 194.
Yeah, we're back to tariffs again today, possibly,
So that's down because of that.
Yeah.
I mean, look, I don't think there's a lot of consequence here if you really want to know. I know we want to make a big deal of this, but if we were at 2 or 2.25, I wouldn't change my outlook on the economy very much. Especially,
but then, how about 3? How about 3.5?
I mean, look, it depends on the reasons, right? If you have, a nominal GDP running at 5+, a 10-year that runs at 3 is not unusual and would be expected and would be well handled by the economy. It's the question is you get there because there's inflation concerns, and or we can't finance the deficit.
We can have that too. Paulson thinks the dollar gets weak for a lot of different reasons, and that inflation, all good though.
I mean, look, Joe, the great thing about the American economy is its dynamism. You're going to have some people do well with a weak dollar, some people do well with a strong dollar. Right. I wouldn't be worried about that either.